Dear friends, welcome to weekly view on markets. Markets have given a technical and reversal signal during this week, indicating end to the correction of last 7 months. The correction started in September 2024. Now the correction has come to an end. Small cap index outperformed during this week, gaining more than 9%. Mid cap index also gained around 7.2%. All the sectoral indices gained between 5 to 10% during this week. Now it is a buy on dip market technically. Nifty closed above crucial level of 25,000 and Bank Nifty closed above 55,000 mark. Next phase of bull market is at the starting phase. It is good time to invest now with a 3 to 5 years of investment horizon. Financials and defense equipment manufacturing sectors are expected to lead the rally this time. Made in India weapons are in demand after the India Pakistan conflict, and defense exports are likely to grow up. Financial sectors have given very good results. RBI is expected to cut the rates. Because of all this, financial sector and defense sector are the favorite sectors for investment at present. Now let us look at performance of indices during this week. Nifty closed at 25,019 with a gain of 4.21%. Bank Nifty gained 3.28%. It is closed at 55,354. Mid cap index gained 7.21%, closed at 57,060. Small cap index gained 9.17%. It is closed at 17,560. India VIX is at 16.55. India VIX had dropped by 23.49. So India VIX is called the fear index. The fear has substantially come down in the market during this week. Now let us look at sectoral performances. All the sectors gained during this week. Realty sector gained more than 10%. Metals, media, and PSU sectors gained about 8 to 9%. Energy, manufacturing, commodities, automobiles all gained between 6 to 7%. Information technology, PSU banks, oil and gas, consumer durables all gained around 5 to 6%. Consumer durables, infrastructure, NBFCs, private banks, pharma and healthcare, all these sectors gained between 2 to 4%. So overall, there was buying in all the sectors. There were more advancing stocks. The fear index has substantially reduced. Q4 results have been fairly during these last 2 weeks. So with all these things and also reducing geopolitical tensions, everything is supporting the rally in the market. Now let us look at technical charts. This is the daily chart of Nifty index. We can see on the chart, Nifty index has crossed the major resistance level and it has closed above this resistance line and it has closed above 25,000. Nifty is likely to continue its upward trend in the coming week, and the next major resistance level for Nifty will be 26,200 levels. This is the chart of Nifty mid cap index. Mid cap index also has crossed the major resistance level shown by this line, and now it has gone above that. The rally in mid cap index is likely to continue, and the next resistance level is at around 60,000 for Nifty mid cap index. This is the chart of Nifty small cap index. Small cap index also has crossed this major resistance line of 17,000, and it has closed about 17,000 level, and it is likely to test 18,000 level. The next major resistance is at 18,000. If it crosses 18,000, then we will see further rally and might go to the all-time high of 19,000. This is the chart of Bank Nifty. Bank Nifty has given a vertical rally for last 2 weeks, and after that, now it is consolidating in a range of 54,500 and 56,000 on the higher side, and this is likely to continue for the coming week as well. And ultimately, Bank Nifty will break on the upper side, that will go to the all-time high. Now let us look at some of the macroeconomic fundamental parameters of the market. RBI foreign exchange reserves is almost likely to touch the highest level. It is at around 690.6 billions US dollars by this weekend, and it is up by 4.5 billion US dollars. Foreign exchange rate is 85.51 rupees per dollar. Dollar index is at 101.09. Brent crude price is at 65.33 per barrel. There is a big fall in the gold prices during this week. After touching 1 lakh per 10 grams, the gold price has come down. It is at 92,480 for 10 grams, 24 carat. FIIs and DIIs both continue to buy in the Indian market. For this week, FIIs have bought 15,925 crores worth of equity, and DIIs have bought 9,557 crore in equity during this week. Both FII and DII buying is giving good support to the markets. Retail inflation data has come. It is at 3.16 for the month of April, which is lower than RBI target of 4.5. So there is a RBI policy committee meeting in the first week of June. So I am sure RBI will cut rates further as inflation has come down substantially. Q4 results have been announced for about 1,200 companies. The result so far is like this: 636 companies have shown growth in the profits and their revenues. 574 companies have reported losses. So more companies have reported losses. They have margin pressure, and also the growth is not so good. So one has to be very specific in choosing the companies which are having growth and good profit. Now, since already Nifty has run up by more than 2,000 points, market valuation also has to be looked at. Nifty large cap index is trading at a trailing PE of 22.39. Nifty mid cap index is trading at historical PE of 33.553. Nifty small cap index is trading at historical PE of 31.64. So we can see that the valuation of large cap companies are at lower level. So the market is in favor of the large cap at present. Also, even though the mid cap PE is at 33.53, earnings of the mid cap companies are much better than large cap companies. Looking at forward 1 year earning, even some of the good mid cap companies and also some of good small cap companies can be looked at for investing at present. So geopolitical tension is coming down. Ukraine and Russia war is likely to come to an end. There are peace talks going on. India-Pakistan conflict has come, and further diplomatic issues are being talked about, and also Israel and Hamas conflict is also likely to come down. Trump's trade war is also softened, and there are negotiations on tariffs. China and US, the major trading partners, have agreed to come to a negotiated settlement. The meetings have started. With all these things, it is a good time for the markets. Most of the troubles which have been worrying factor for the market for last 2 years are getting solutions. With this, I am confident that market will be in the uptrend in the coming days. RBI is cutting interest rates. That will be good for the corporates as the cost of capital will come down, and Indian government is also taking a lot of steps to promote the growth in the economy. With all these things, I am confident that investors will get very good returns in the coming months and quarters. Investors can look at investing more, or they should continue their mutual fund SIPs. They will get good returns in the long run. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We will meet again next week. Thank you.